Coming up on the SBS On The Money podcast, how the Gaza peace deal impacted markets, gold eases a little bit, and crypto regulation, what exchange operators think. All of that and more next. Hi everyone, welcome to the SBS On The Money podcast for this Thursday, the 9th of October 2025, a day where the Australian share market rose, the S&P ASX 200 edging closer to a record high, but up today by 0.25%. We'll have the details with Robert Talevski from Activam Group in a few moments. But first, the federal government has introduced new draft laws that would regulate digital payments and introduce a framework for governing cryptocurrency assets like stablecoins and wallets. It's also continuing to take submissions on earlier draft legislation covering digital asset platforms, which would require cryptocurrency exchanges to obtain an Australian financial services license. That comes as the Bitcoin price rises to around about $122,000 per coin, and it also follows Nasdaq-listed crypto exchange Gemini launching in Australia. For more on his take, I spoke with Gemini Asia Pacific head Saad Ahmed. Saad, so Gemini is launching in Australia. Why now?
Yeah, Ricardo, the context is that Gemini is a product that Australian customers could have used even in the past, except that they would have to onboard to our global entity, and then they wouldn't have kind of a localized experience. So you're effectively sort of like an international customer. What we're doing now is really localizing our operations here, which means we're going to hire, we've hired a local head of the market. We're going to hire a local team and build in Australia for Australia. So what that means is that the customer experience on Gemini now is going to be a little bit different in that customers will go through a localized KYC, sort of a DVS KYC, and then the funding rails that they use, which is to be able to fund their account. Previously, they would have had to SWIFT money in to a US account. Now they'll be able to use a local bank through NPP or PayID and get the funds onto the exchange. So that's one change. And I think your question around why now is because we actually think that there is a compelling opportunity here for us to localize the experience because we think that the market has tremendous headroom for growth. So I'll give you a couple of statistics based on our own research. We estimate that about 22 to 25% of Australians own crypto. And we've looked at other research that suggests that number might be as high as 30%, which gives us confidence that there is a lot of ownership of crypto in the market. And I think that's actually higher than what we see even in the United States. So it's a compelling market for us. It's a massive opportunity for us. And we felt that the right thing to do would be to localize our operations and build it out in Australia for local customers.
And for those in our audience that don't necessarily understand, or perhaps they're not part of that 25 to 30% though, what's the purpose of the exchange and how does it work exactly?
Yeah, so the exchange allows customers to buy, sell, trade, hold cryptocurrencies, whether it's the large cap cryptocurrencies that some of them might be familiar with, like Bitcoin, Ethereum, Solana, or about 70 others. And it allows a seamless, secure platform, which is registered with Austrac for them to be able to do that, right? So they can get Aussie dollars on the exchange, and they can buy Bitcoin, Solana, Ethereum, etc., and basically custody it with Gemini as well.
Okay, so the Australian government is taking a closer look at the regulatory environment in this space. So today, for example, draft laws were introduced regulating digital payments and introducing a framework for governing crypto stablecoins and wallets, while many exchanges we already know will be required to hold an Australian financial services license. What's your take and how will you navigate this?
Yeah, so just to give you a little bit of background on Gemini, we're regulated in many jurisdictions around the world, not least of which is NYDFS, which is the New York Department of Financial Services, under the MiCA rules in EU, so covering all of the EU, FCA in the UK, MAS in Singapore. And so, we welcome regulation. We think that it's a positive step for the industry, and we're very confident that we would be able to comply with the regulation because we have a long history of being compliant and regulated in all of our markets. Our ethos is very much to ask for permission, not for forgiveness. And whatever shape or form the regulation comes in, I think we're pretty confident that we'll be able to comply with it, given our long history of being regulated in so many jurisdictions around the world.
Do you feel Australia's regulatory environment is open to growing this sector, and how does it compare with those around the world?
Yeah, look, I think, to be honest, my take is that regulation always helps the sector grow, right? Because of course you could potentially over-regulate, but I think what we've seen with cryptocurrencies is that the more we move towards regulation, which is what's been happening over the last couple of years, the more we see adoption actually increase, right? So if you look at the last couple of years, we had the spot Bitcoin ETF approvals that happened at the beginning of January 2024. That allowed a lot of institutions to come in. Around the November of last year is when the new administration started really sort of taking a positive stance towards crypto as opposed to the previous administration in the United States. I think we've seen a lot of capital inflows into cryptocurrencies and really this institutionalization of the asset class and this social proof of the asset class that look, there's names like Fidelity, BlackRock, etc., that are in this space. And so what's actually happened is that the regulation that's coming in is actually giving a lot of comfort, right? Because some of the tail risk that exists of crypto being banned or anything like that kind of goes away because now we're moving to a world where crypto is regulated. People are much more comfortable investing in this asset class, and many people feel that it can make a meaningful asset as part of a diversified portfolio.
Just a couple more. What role do you think operators like Gemini play in limiting criminals from accessing or transacting on your platform? We know, for example, earlier this year, Binance was ordered to appoint an external auditor following concerns related to its anti-money laundering and counter-terrorism financing controls.
Yeah, so I mean, we play a very meaningful role in ensuring that doesn't happen, right? And that starts with things like our AUSTRAC registration here in Australia, and be working with regulators around the world on our AML practices. We have several sort of audits that happen around our operations around this vector, and we continue to make sure we're at the cutting edge of ensuring how we're complying to some of these laws around the world. So yeah, I think crypto exchanges have a very meaningful role to play, and our mode of operation is a little bit different from Binance. We're regulated in most of the markets that we operate in, right? And so it's like I shared a long history of being regulated, compliant, and that's kind of for the ethos that kind of sets Gemini apart.
And finally, you've been quoted today in saying that you don't necessarily plan to include an Australian dollar-backed stablecoin on Gemini, but you're open to it if there's demand. Where do you see these type of technologies going, and what's next for Gemini in terms of usage?
Yeah, look, I think this cycle has seen a very strong sort of stablecoin narrative, and I think when you talk about usage, I feel that there is ample evidence that this technology could fundamentally change how we think about global finance, right? And coupled with things like the real world asset tokenization, if you think of the infrastructure, the financial infrastructure, and how this technology has potentially represents a sea change in how this infrastructure can be used. So I'll give you an example. Multinational companies move funds around across global entities all the time, and there's no reason why that can't be done through stablecoins in the future. Every bank wants to tokenize their products, and it's a much faster route to market than traditionally building those products out. And so, if they have a tokenized format of that product, it can be done in real time effectively. And so, I think that is a massive opportunity in and of itself, which then actually drives on-chain activity for some of the tokens that help support some of that infrastructure, which then drives more investment into the space. So I actually think that's a positive feedback loop that we see from stable coins in real world assets, which doesn't get talked about a lot. But we're quite confident that the world is moving in that direction. And so we see the power of that technology and what, as it relates to listing Aussie stablecoins, I think, as more adoption happens of the Aussie stablecoin, we'd be more than happy to list it. We've got other stablecoins on our platform, and we'd be more than happy to list other stablecoins as well.
That's Saad Ahmed there from Gemini. Let's take a closer look now at the Australian share market. The S&P ASX 200 today rising by 0.25% to 8,969. 7 of the 11 sectors on the index ended higher. The best materials and consumer staples. The worst included utilities and financials. Nickel Industries and Capstone Copper, the 2 top performing stocks by percentage change on the S&P ASX 200. Megaport and Austal the worst. For more on the day's market action, I spoke with Robert Talevski, the Managing Director of Activam Group. Robert, the ASX is edging closer to record territory after a few days of falls, even though those falls were quite small anyway. What's leading to this investor optimism?
Yeah, so the ASX 200's trading at about 0.5% higher today, itching closer to that record close of 1919 set back in August 21. 9 out of the 11 sectors were in the green today. Tech and consumer discretionary were the best performing sectors, offset by the banks. Gold and silver miners ran into a bout of profit taking following a streak of record highs. Overnight in the US, the S&P set a fresh record high. The latest central bank minutes were out as well. Fed officials are split on the outlook for interest rates. The Fed cut rates by 0.25%, with most officials, I guess, open to more easing for the rest of this year. Projections are for sort of 2 more rate cuts throughout the rest of this year. Many warned inflation risks remain on the upside, urging caution on further moves. A few opposed the cut, but most agreed. But there was some mention around weakening labour market as well.
As we know, geopolitics can play an influencing factor on the market. We've got the developments in the Middle East, particularly this potential ceasefire in Gaza, right? Gold has come off its record. How is this event likely to impact global markets?
Yeah, so gold ran into a bout of profit taking following a streak of record highs. It climbed to US $40.95 an ounce overnight, but it eased in the morning as news of a Gaza ceasefire encouraged investors to cash in. In our view, there's still a strong case for gold to remain near current highs. Ongoing concerns over the the current US government shutdown, rising geopolitical and economic risks feeding into markets, policy uncertainty, and actually central banks buying gold should continue to add support.
Any other company news you're keeping an eye on today?
Yeah, lunchtime favourite, Guzmani Gomez jumped to a 6-month high after announcing a $100 million buyback and reporting 17% increase in quarterly sales. So shares are up about 1.5%.
And finally, what are you telling your clients right now? Where do you see the opportunities for investors?
Yeah, stay invested. Global equities, they're up 23% year on year. So what a year so far. Investors who stayed the course have been rewarded. We still think the AI theme, we still think there's some upside to come there, even though this sector's up actually 40% year on year. We continue to favour small and mid-cap sectors with sort of lower coming interest rates should provide support for those sectors. They've actually outperformed. So the small caps have outperformed the large caps 25% to 30%. So that's another good sign for that sector.
Robert Talevski there from Activam Group, and he wraps up the podcast for this Thursday. Don't forget, if you enjoy it, to give it a rating or review on Apple Podcasts and Spotify, and to click subscribe. If you want to follow me on social media, you can get me on Business Ricardo across most social media platforms and at Ricardo Gonçalves on YouTube. This SBS on the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.